Welcome. China's collapse and how smart CEOs are turning chaos into opportunity. In this video, we're going to talk about the hot numbers that are in the news right now, talking about China's demand decrease, how their growth is going down. We'll talk about the RMB, and I'm going to go into 4 charts that I promise you haven't seen, and I'm going to go through those step by step throughout this video and link this all together on how China's decreasing growth trends are going to affect businesses here in the US. And if you're a business owner, at the very end, I'm actually going to go into details about what I would do, how I would position my company with these changes that are occurring. And before we get started, if you're new to this channel, my name is Luke Peters. I started my business from a garage and grew it over 20 years and eventually had an 8-figure exit. And I'm on a mission to help other CEOs position their companies correctly, build them profitably, and then get to the exit. So thanks for tuning in. Okay, great. So let's go through what the big numbers in the news are. You guys have all heard, or you've seen the video titles, China collapse, but what really is happening and how is it going to affect US businesses? Okay, first, consumer prices fell 0.5% in November. Producer prices have declined 3% in total, marking 14 months of continuous declines. Weak domestic demand and pork prices have been challenged. So when all of those things moving together, the news headlines are talking about deflation. So the main fear is that deflation could cause a downward economic spiral in China, that consumers are going to buy less. We've all heard about the housing issues in China, and we've heard about potential housing issues in America, that haven't really sorted themselves out. Prices are still actually increasing in many markets. So these things are, really tough to predict, and they happen on a different timeline than where we think they're going to happen. But as it relates to China, this problem has been building for years, and now it seems like the consumer is going to be a lot weaker. So how does that affect businesses here in the US, specifically your business? If you're a founder CEO, so if you're running a small and medium-sized business, we're going to talk about how this affects you, because that's a lot different than how it's going to affect a public company, maybe even companies that are importing into China, where definitely there's going to be some direct effects. First, let's look at chart 1. This shows the inflation rates in China and how they were moving up, and some of that correlates to growth rates, and now how inflation is just really tanking and getting near negative values, as you can see the month over month in this chart. So it's really important to understand what this means and what the fears of deflation would be. Consumers thinking that prices will keep decreasing, will hold off on spending. That will lead to continued slowdown in economic development and growth. That in turn would lead to less buying. And then the fear is that, there's a lot of rich Chinese money that's spending here in the US. And so that definitely can affect the whole globe, with China having the second largest economy in the world. So next, let's look at chart number 2. This one talks about the declining trade revenues. So trade with the US, trade with the rest of the world. Obviously, China is the maker of all things. And as you can see, their numbers, peaked after the pandemic, but then they had another peak in October of 2023. But ever since October of last year, those numbers have been decreasing every single month. So decreased trade, who's going to make up the gap, all the companies that are affected. And also later on in the video, we're going to talk about how you should think about this, especially if you're importing from China. Obviously, to negotiate prices, but we'll talk about a few of those details if you're a founder, CEO, and how to take advantage of this situation. Okay, so on that same chart, looking up other statistics, I found out that export prices have fallen in different markets. It varies throughout the world, but up to 18% year on year. So 18% decrease in export prices. So your pricing power. Now, this has all happened at the same time where the RMB has softened. And as you know, in Japan, the currency has had some challenges, and throughout Southeast Asia. So this is kind of a trend worldwide, especially as, the US hiked their interest rates, and that put a lot of pressure on other world currencies. So the dollar is stronger at this moment. So your purchasing power on these exports has improved. The prices have gone down, but they're still, the trend is exporting less month on month versus previous years. And the trend is lower consumer demand in China. And then, shifting to the US, the job market is slowed down, but GDP is still growing. We're like the only major market worldwide where we're seeing this type of growth, apart from, say, India and some other major markets like that. But all of Europe, Japan, China, everybody else is seeing a slowdown. They're seeing, liquidity shrinking. And we're not seeing that as much in the US. So all of these recession fears have not panned out. Okay, and then finally, on chart 3, you can see China's exports decreasing. So take a look at this chart and look at the numbers decreasing year on year and the trend that's happening there. And of all the charts, this one right here, that's up on the screen that's showing the exports decreasing is the biggest of all of them. So again, it's an alarming chart. You probably haven't seen this in other videos. People usually don't dive into the weeds. They're just showing kind of the overall GDP numbers and the overall inflation numbers and those types of trends. But listen, China makes everything. If you're going to buy any household electronic, it's coming from China. Okay, and then just look at the decrease. This is a massive decrease, and it started happening, it looks like late 2022, 2023, early in 2023, and it's continued all the way. This is definitely affecting anybody who's importing. This is affecting when you go to Target, Walmart, when you're buying goods, the assortment, the price, and you've seen as a consumer, you've seen prices decrease alongside of this. Okay, so now what does all this mean? We've looked at the 3 charts. We've talked about how in China, the economy is slowing. There's fears of deflation. So what is the risk? The risk is that liquidity globally is going to kind of dry up. Liquidity really is the engine that drives everything. When there's cash, when there's liquidity, even in tougher job markets, the U.S. economy has continued to grow somehow, right? There's just so much liquidity since COVID. So the worry is that liquidity is going to dry up. And how I like to think about this is you got to go into the second order thinking, okay, if nobody did anything, yes, liquidity would dry up. But what's likely to happen? Governments, central banks are going to get involved. The Fed has already talked about how it's going to lower rates, and every single government will follow and try to loosen up the situation in whatever way or power they're able to for their currencies. So China still, I'm sure, has a lot of cards to play, and it's probably not a good idea at this point to make quick reactions on this and assume things are going to happen as fast as, say, they're portrayed in the media. Okay, so it is hard to predict how a weaker China will affect your typical small and medium-sized business. Definitely, it's going to affect the large caps, I would think, right? I mean, if they're consuming less, and a lot of the large caps have a majority or a large portion of revenues outside the U.S., they're definitely going to be affected. And some of that will trickle down to business. So this is going to affect the whole world, but it will take time. And usually these things take a lot longer than the news cycle wants you to believe. And I think that's usually the mistake of the small investor. Okay, here's the news. Okay, I better trade the news. And then things actually don't happen for, months or years down the road. So if you're a CEO, a small business founder, small and medium-sized business, how does this affect you? First off, what I would say is don't make an immediate reaction. Don't make a gut reaction to this. Continue with your yearly planning and budgeting. Do the same things you would always do, except I'll give you some thoughts on how I might do them a little bit differently. But just do them as you normally would with the understanding that usually the predictions happen. What I've seen is they happen slower than they're forecasted to happen. So the first one is keep expenses low. This is common sense. This has been a trend ever since 2022, and there's been so much supply chain disruption. But I think every year, depending on how your business is doing, you want to look out another 12 to 18 months to understand what could the economy look like. And I think it is a good time to be conservative, not a time to pull back, but a time to be conservative. So look at those expenses. Specifically focus on profitable sales. How are you handling marketing spend? So let's look at chart number 4 here. This is a really interesting chart. We've seen this play out though since probably 2022, when a lot of companies pulled back on marketing spend or shifted marketing spend. And really what they didn't necessarily say pull back on marketing spend, especially like performance marketing spend. What they said is we need to have performance. Before that, it was just spend at all cost. And then it became, okay, be profitable on my spend. So I think it was just a pullback of that excess that happened over COVID. And we're still living in that world. So pulling back on marketing spend, if you're consumer products, you still need to spend and you need to grab those eyeballs. But there's a lot of ways we could go deeper into a different video, but how you think about performance-based spending, how good are you outsourcing that? Are you guys doing that internally? What are your metrics? How good are you at understanding that your spend is bringing a true ROI? Because there's a lot of attribution metrics in there and a lot of assumptions built into marketing because we can't track every user everywhere. And with the recent changes on iPhone and a couple of years ago and all these other things, there have to be a lot of built-in assumptions. And as a CEO, sometimes you can be, let's say, for lack of a better word, tricked into believing some of these metrics, some of these ROI or ROAS metrics, when there's all of these built-in assumptions. So it's really important. I guess what I'm getting at is on your marketing spend, really understanding your true ROI, your true measured ROI, and then looking at the attribution separately. Okay, that's where I would go on the marketing side. Cost reductions, product cost reductions. So as you're importing, obviously, I'm sure you've recognized the trend. If you're a successful business now, prices are going down. But some of these charts that are coming out can give you a little bit more ammunition to bring back to the factories and put more pressure that, hey, you should be getting, a little bit more maybe on the cost reduction. And I think it's really important to do it. I'll tell you the reason next why. But this is something every year at the meetings with factories or at the Canton Fair or any of these other events, you're negotiating pricing. And I'm sure you've been doing this every year the last couple of years, but now we've got the RMB has been weakening. A lot of the Southeast Asian currencies, Japan has gotten weak. The dollar has been strong. So whatever you have gotten, you probably can get more. And these factories need your business. And let's understand why you have to get more, because you're going to have to lower your prices too. This isn't, COVID where, in certain areas you might have gotten price decreases, but you raised your prices. No, you're going to be facing price pressure on your products as well. So consumers are going to continue to see lower prices. I think here in the US, suppliers are going to expect that there's going to be price cuts on their end as demand decreases, especially if you're importing from China. So you as the brand, you as a retailer here in the US or the brand selling to the retailer, you're going to have competition of continued decreasing prices, and you're going to have to match that. Your margins can still stay the same. They can even improve. But I don't think it's a time to expect your costs to go down and keep your prices flat. I don't think that's going to happen now. I think you're going to have to chase that a little bit, still while focusing on strong gross margins. And I think potentially weaker demand here in the United States. As it stands now, liquidity is still flowing. It hasn't dried up here in September 2024, but that's something to keep an eye on in the future. Anyways, I hope this video was great. Hope you guys learned something. If you did, please subscribe, and we'll catch you on the next one.